This is Taking Stock on Bloomberg. I'm Pimm Fox. We're talking about today's big market rally in U.S. stocks. My guest is Joe McAlinden. He is currently at Catalpa Capital. Also, he's been the former chief investment officer of Morgan Stanley Investment Management. Joe, I know you've been taking a look also at what's been happening in China. We got the export numbers up almost 50%. What does that lead you to believe about the global economy?
Yeah, well, China's had this administrative tightening to calm down a housing bubble that they've had, which was largely speculative in China. And there's been a lot of coverage of that, a lot of focus on it, and it has spilled over into the global economic fears because people have felt, well, if China slows down, the whole economy's world
just take a look at their stock market. It's done terribly this year.
The stock market has done terribly, but the thing is they have not raised interest rates. They have not done a major monetary tightening, and they are continuing to do a lot of stimulus to raise living standards in the countryside and to get people to buy a lot of basic appliances and to modernize. That stimulus is going to be very powerful over the next 12 months, and I think what you're going to see is that China's consumer emerges. Not the U.S. consumer, but the China consumer emerges along with the Indian consumer as a big factor in the world economy. So I think that the global economy is actually going to surprise on the upside. Already you're seeing people, organizations that were table-pounding bearish a year ago, the big, global economic commentators, the IMF and so forth, are coming out with more robust
They're having to revise upward all of their estimates for global growth.
Right, and all of that, so that's bullish for profits. It's bullish for all the businesses that are involved in global economic activity, including, you were talking before with your stock exchange reporter about the transports and what's going on there in the U.S., but that's a global phenomenon. I think that the boat business, the trucking business, the railroad businesses, these are all very well positioned in a place where you want to be to participate in this next leg up in the bull market.
But do you really believe that individual investors are going to dump their bond holdings and start buying stocks? I mean, isn't it, 3 times they've been made a fool?
They almost they were just starting.
I guess, of course, unless they listen directly to you. So I get that as a caveat.
This market has been had been going almost straight up since a year ago March. We had little corrections, a 5-6% correction, then an 8-9% correction, and each time we thought, that people thought this was going to be a bigger dip. This time we had a 13-14% correction in the S&P, but now we seem to have turned around. You get this market up another couple of weeks, and you'll be reporting on statistics of inflows into equity mutual funds by July and August, which will, I think, be fueling the next leg up. There's also a lot of money on the sidelines or short in the hedge fund community, where folks have been, skeptical about this whole rally and have jumped aboard this downtick for the last few weeks, and now they've got to move the other way.
They've got to actually buy back those shares, so you think that they're covering their calls?
There's some short covering going on, but also money coming off the sidelines, and it will be coming, in my opinion, it will be coming out of the fixed income arena into equities.
All right, if it goes out of the fixed income, that means bonds. If it's leaving bonds and goes into stocks, what's the best group of stocks right now to invest in?
You and I have talked about consumer discretionary as my favorite group. I've liked that. I continue to like it, but I would say that the one that's moved up in my mind, partly because it sold off a lot, partly because I'm bullish on the global economy, is energy.
Energy?
Yeah. I think for a whole host of reasons, energy prices are headed higher. The energy companies are going to continue to be a whipping boy for the politicians after this BP thing. But other than BP, I think that the energy companies, particularly the ones that do onshore drilling or offshore drilling in other parts of the world, are going to be very well positioned to benefit from $80, $90, $100 oil prices, which we will see in the next year to year and a half, in my opinion.
So the next 12 to 18 months, we get maybe $100 a barrel for oil?
Yes.
And this is what, because there's going to be real demand to sustain that?
Global demand.
And that's going to come from where? From China, from India, from emerging markets?
India, and the U.S. I think we are still the world's largest oil consumer, although we don't grow our oil consumption the way China and India do. But we have cyclical swings, and we've had a big recession. Now we're coming out of it. Miles driven in the U.S. are going to be turning up sharply. So when you put all that together, I think there's going to be a big upside surprise on the consumption front.
All right, so you like the onshore drillers, particularly in the United States. You like deep water anywhere but the Gulf of Mexico right now because of the political risk.
Right.
What else do you like?
But also think about that. The suspension of new drilling activity is basically going to change the trajectory for our supply. So that means the boats that bring oil from farther away
You need more very large crude carriers,
Exactly.
right, in order to transport it to the United States.
Exactly. And prior to this, we had been looking at an excess of supply because of a big build that had gone on for the last couple of years. So some areas of consumer discretionary, definitely energy, the number one pick.
Now, consumer discretionary, just to get the detail, this is people shopping.
People shopping and buying homes, as we talked about a minute earlier. I think you're going to see the home data when you get into August, September, October is going to be a significant upside surprise.
And they're going to be helped by these low interest rates.
Low interest rates are very compelling for the mortgage borrower. And when you put that together with depressed home prices, the affordability for housing in the United States is at unprecedented levels, actually, compared to incomes.